Welcome to Level Up Real Estate Investing Podcast with Robert Heyder. This is a no-fluff podcast where we dig deep into the journey of scaling your real estate investing and wholesaling business and discuss how to break into commercial real estate investing. Hey everyone, welcome to Level Up Real Estate Investing Podcast. Very exciting day. We got Jace Graham out of Dallas, Texas. Absolute stud. Jace and I have known each other for a couple of years now, met through a mastermind. He's been in real estate investing for a few years on the wholesale side, but has been in the oil and gas industry since 2004. So a little over 15 years now. Manages a $50 million portfolio. Really exciting stuff. There's a lot of overlap as it relates to kind of the real estate investing in the oil and gas industry. So I'm really excited about this conversation. And like I mentioned, you know, Jace is just a stud. Met him and his wife a handful of times on some trips that we've gone to. 2 kids in Dallas, right? And Anything else I missed here, Jace?
Yeah, I think you've got a good high level coming in live from a little town called Evant, Texas, in the middle of nowhere. So nice. In a little home, our little mobile office, our Airstream. So we are live and coming at you, man. So appreciate you having me on, Robert.
Absolutely. I mean, nobody quarantines like you. Look at that thing. You're like in an Airbus.
Hey, you know, you got to make it happen. There's lots of opportunity out there right now that we're seeing on both the oil and gas and the real estate front. So excited to kind of unpack that over the course of the call here.
Yeah, absolutely. So what's going on? Tell me a little bit about what you guys got going on, about the oil and gas industry, where you're seeing opportunity. Both on the real estate sector and that. And then I know with such a large portfolio of assets under management, you know, you obviously are tied into private equity and family offices and things like that. So it'd be really interesting kind of during this podcast to just hear like what you're hearing from them, what you're seeing, you know, kind of all of the above. So what do you got going on?
Cool. Probably just quick backstory on me, real high level. You know, was born and raised into a pretty entrepreneurial family. Grew up always kind of mowing yards, shining shoes, whatever it took to make some money. So always kind of had that in that bone in my body. Yeah. And you know, was in the oil and gas business. I was in a family business. It was my dad, my brother, and me. And you know, we're all working together. I was with that business for about 15 years, and it unfortunately it didn't work out as planned. And you know, me and my old man, we kind of saw a little bit differences of opinion, and I went and formed Rising Phoenix with the focus on raising capital and doing oil and gas mineral deals. And because I was kind of a one-trick pony, that's what we did over with kind of the family business. We also did some operations where we'd actually go out, lease up areas, you know, raise capital from private investors, and then go actually drill new producing oil and gas wells. Okay. That was what my old man kind of did his whole career. Yeah. I kind of did this bolt-on oil and gas mineral acquisitions where we actually would be buying the underlying assets underneath where this production was going.
So mineral rights versus the actual oil.
Yeah, and just mineral rights are, you know, if Farmer Brown out in West Texas has 100 acres, an operator like ExxonMobil would come out and lease Farmer Brown, you know, his rights to his minerals. Exxon would drill the wells, revenue would come out and pay Farmer Brown. We would come in as a mineral buyer, offer Farmer Brown a lump sum payout for that monthly cash flow. So that's what I've always done. That's my wheelhouse. Fast forward into 2016, we sold our house. We pulled out as much equity as we could to start a business. All right. I was scared shitless. I still run scared. Okay. So that doesn't change. But what did change is I kind of realized I was having a hard time raising capital because I was going after all new investors. Okay. Mm-hmm. Brand new investor pool. Me and my old man had raised close to 30 million in assets from private investors, from family offices, from broker dealers, you name it. We raise capital in those different silos. Yeah. But in 2016, I was out on my own, and I was trying to figure out like how do I raise capital from people that I don't know? And what's the next steps? And so my wife was a realtor. She still is a realtor. And I just said, listen, I think we can buy houses the same way we buy oil and gas minerals. And we're going to send out a big direct mail campaign. And we did that. I sent 10,000 mailers. I didn't know what I was doing. I didn't know what the heck wholesaling was. This was in August, September of 2016.
Uh-huh.
And I told my wife, I was like, listen, I dropped 10,000 mailers in this part of Dallas that I felt that hedge funds were buying properties in that $100,000 to $150,000 price point. And I said, oh, by the way, your phone number's on the direct mail pieces, Hillary. So you need to, I said, I'm going to do the marketing and I'll generate the leads and you're going to answer the calls and then you're going to kind of work them through and try to see if we can do any deals. And I just said, 10,000 mailers, surely we can, we're going to buy something. And lo and behold, we bought 2 deals, wholesaled them, $15K on each one. And I was like, man, we can scale this. So that was kind of the genesis of our real estate business.
Wow. I can't believe we've known each other that long and I hadn't really heard that whole story. So that's the benefit of this. That's fantastic. So you hadn't really heard from anyone or like been, coached or anything. You're just like, hey, I think we can do it the same way we run this other business. Let's give it a try, and just threw out a bunch of mail.
Exactly. And it was kind of, we were different. And I think that's important because I think a lot of the wholesalers and the guys that are in our space, everybody kind of uses the same postcard. Everybody uses the same look. And I think what you need to do is kind of think outside of the box a little bit and separate and make yourself a little different. So what we did is we came in, I had a 1-page mailer that had an offer price on the mailer. This is what we do in the mineral world, is that we put an offer actually on every mailer that we send out to mineral owners. We'll buy your minerals for $1,210. We'll buy your mailers for $1,500, whatever that may be. And I just said, I'm just going to put an offer price on a letter. Okay. And how I did that is we've got a data scrubbing company in India. There's easier methods now, and they went into Zillow and literally went in and pulled the Zillow's estimate on all 10,000 homes, just manual labor, and populated that. And I just offered 70% Zillow's estimate. Out the door he went. I was just looking for motivation. So I think what happened was when my audience got, or the folks that we mailed them to got their mailers, they're like, what is this? It looks a little different. They open it up. There was a price. And so people were raising their hands saying they were interested in transacting. And then we kind of went through the whole sales process to really see that motivation, get out there, really negotiate a price.
That's fantastic. I love that. Yeah. So
yeah,
and you're absolutely right. And honestly, I was just talking with Aaron Pimpus earlier this week, and we were kind of talking about that, like how this industry, the wholesaling industry, is so based on trying to shorten the curve, trying to kind of build off of what other people have already done so they can get there faster, right? Which is the key. So, but what the downside of that is so many folks just kind of do the same thing as everybody else. They're not thinking outside the box. They're not bringing natural thought to anything. They're just doing, right? They're just doing which gets you going much faster, but it limits you to some degree. And the really interesting thing is, like right now, is that everything's changing, in such a change. I'm going to take this down to make sure it's not echoey, but in such a changing world right now, what worked before isn't what's going to work in the future, at least in this, 3 to 6 month window that we have before we have any real certainty of kind of what's going on. So the same old thing doesn't work the way that maybe it used to in the past. Right. So it's a really, really interesting time. And to that point, like having to think outside the box, having to kind of get creative, be unique, give a bit different message, is more important than ever. So, I'm so glad that we're talking about this right now, because it's really, really impactful. I mean, folks, I don't know, are you guys under a stay home order?
We are.
So within that stay home order, can you go out and look at can you guys go out and look at appointments, or is real estate sectored out, or how does that work?
So we can. I mean, that is kind of one of the trades of business that is still allowed to stay open. We are utilizing some different methods and services to get out in front. Services like We Go Look, which are in major markets. We're also using a service down in Dallas called Home Snapper, and they do like virtual 3D dollhouse tours for pictures and videos that we're using to get in front of our investors, so that they can literally sit there and look at the property, look up, look down, look all around inside that property from their home or their office or wherever they are. So some of these things, I mean, we're constantly right now on the phone with my team doing web calls, and we're restructuring, rewriting, amending, updating the SOPs that we've used in the past with how do we do this virtually? And quite frankly, this is actually, it's allowing us to really start to think outside the box on that as well, so that we can then build a more efficient way of doing things. And I was telling them, I was like, guys, this may be the way we do this from this point forward, which, my acquisition team is just like, man, we love doing all this all over the phone versus driving all over town and meeting with people and all that kind of stuff. So, I think you need to be rethinking everything inside your business, especially right now.
Yeah, absolutely. And honestly, that's the same thing we've been going over with our team. And that's really why I wanted to jump on the call with Aaron, because he's been doing the virtual wholesaling thing for at least 2 years now. And it's been a very, very big piece. So even if he's buying a house in his neighborhood, he was doing it on a virtual basis, which is just a unique concept, right? So he just wanted to make sure that he was running that process all the different ways. And I'll get off this, but that's exactly to your point. Like, we have to get more creative. The mail pieces maybe in the next 3 months, 4 months might say something along the lines of, we can buy your home, or we can contract your home and give you an offer without ever, virtually, without ever, walking through the home, something along those lines. We were kind of talking through that, like, what's the message that people need to hear? Because we're getting leads right now. I mean, we're getting about as many leads as we have. We cut marketing spend for the interim, short-term marketing spend cut on the buy side, simply because we needed to dig in and hone in on who the actual buyers are, right? Who are we going to sell the assets to? Because a lot of those folks have pulled out, given that the hard money and private money kind of industry is frozen up. There's kind of a liquidity freeze there. So with a drastic limitation in buyers, we didn't want to throw the same amount of marketing out and bring all these leads in and then not be able to do anything with them, or not know when we could sell them, Right. So we've kind of pulled back, but we pulled back spend by about 60%. And we've only been targeting like the most direct channels that we can get to exactly to the property types and the folks that we have buyers for right now. Over the next 2 weeks, once we've revamped and we know exactly who our buyers are, and we're constantly doing this big push to bring more buyers in, then we will adjust marketing accordingly. But to that point, when we do, I think the message needs to change. The copy needs to change. Everything's going to be a little bit different, at least for the next 3 to 6 months, I think. And I don't know how long after that, but I know in this next window, it's going to be very unique. So you need to be thinking about,
the situation that your audience is in, and speak to that directly, but on a mass level. Okay. And so what is that? Like, maybe ways that, hey, we can come out, we can buy safely, right? We can do electronic signature via DocuSign. We can do email closings. We can do remote notaries. We can do video walkthroughs, providing that value add to folks to where, we can still move forward, if, you're interested in selling your home, even under this current situation. So, I think it's important that your copy and your message, you need to reflect that, and you need to separate yourself from the guys that are still using the same yellow letter, that's been out there for the last 5 years. Is kind of thinking about, hey, how can I, adjust the message so that it is speaking directly to my sellers in this current time, now more than ever, because you're going to be able to separate yourself from the rest of the folks just by doing that.
100%. And the We Go Look and Home Snapper, are those the same type of service, or is one more, you made it sound like one was, okay, they go in, they kind of do a 3D kind of, hey, you can kind of look around as if you were in the room, versus maybe just someone that goes and takes photos for you.
Exactly. I mean, We Go Look, they're just going to do kind of generic photos. They also have a notary service available. So if you're getting things notarized, it's a one-stop shop. You can kill 2 birds with 1 stone there.
Got it.
A group like Home Snappers, what we did is I just said, we actually had a property that we were selling that more on a retail space, which is a true fix and flip.
Yeah.
And, my wife called in this group that would come in and do this virtual 3D and all this kind of stuff. And I just had a conversation with the general manager in our market. And I just said, hey, listen, what if we do this on these smaller homes that we just clean out and list? I go, it doesn't necessarily have to be, some $500, $600 million home. And he's like, no, it doesn't. And so we kind of negotiated I said, well, we're going to create a Rising Phoenix spec. Here are the 36 pictures. Here's the video. We even have drone. I mean, all this included in right now. And you're spending a little money there, but then you got to look at what that can result in as far as getting a deal done. So what we really want to do is I want to put myself in a position to where I'm thinking on everything that my buyer needs, everything from the repair bid that my general contractor did, from the inspection report, the third-party inspection report, to the videos, to the everything, and providing that to my buyers, okay? And just saying, I'm here to try to make this as seamless and easy as possible for you.
Mm-hmm.
And if I can do that, then I'm providing value to you. And by providing value to you, you want to do deals with me versus the next guy down the street that's just sending a bunch of half-assed pictures on Dropbox and making it complicated for me. So I'm just saying full kimono, like, here's my stuff. And quite frankly, if you want to use my general contractor and the bid that he put together here, because he's actually pretty good and his prices are very reasonable, great. That puts him in business. It keeps the subs in business.
Mm-hmm.
So I'm not trying to keep that all to my chest, close to my chest. I'm trying to be as open and possible as I possibly can with my, handful of buyers right now that are still buying in today's climate.
No, that's fantastic. And that's exactly it. I mean, because you hit the nail on the head. To succeed now is not going to be the same as what it took to succeed in the past, right? Everything's going to change. Everything, we've got to be better. So we've got to provide more value to our buyers because there's going to be less buyers right now. And the ones that are staying in are going to expect more. And if you can't give it to them, then someone else will. And that's just kind of the nature of the game. So kind of working towards that. I love this with the repair bid, the third-party inspection report. On the rental properties, what we've been doing is doing more of a thorough analysis on, rental income, likely vacancy, obviously all the expenses, and then get to a true NOI and then kind of give a really, really reasonable, kind of cap rate, expected return on that, including that in the package, and then just adding more value because one of the things that we've been really digging into is how do we get in front of buyers that weren't buying before? How do we get in front of high net worth individuals, folks that are maybe a little scared of the market right now? It just dropped 35% in 6 weeks, hey, and now they see a little bit of opportunity. They've got cash like, okay, well, we've always kind of wanted to get into real estate. Maybe now's the right time. We're seeing this blip. Okay, great. So we've been trying to figure out how to get in front of them. Well, to your point, as we're getting in front of these new folks, these more sophisticated folks, but are also newer to the industry, they're going to expect all of this data. So if you can get them a good quality repair bid, you can get them third-party inspection report, you can get them a real quality video walkthrough, and if you can give them a financial analysis of the property as well as a good amount of photos and some market information about valuations and kind of what's going on, great. Like now they should be ready to jump. There shouldn't be any really good reason. And for the more experienced buyers, there's a very good chance that you can sell to them without them having to go look at the property. So now if you can pick that up, so now if you can virtually buy and virtually sell, now you're really, really talking about something. And I think that's going to be a huge push. And it's not going to work for everybody. I don't know, how your guys' market works and how I was talking to Aaron the other day about Tampa, but in St. Louis, we're called, Missouri, the show me state. Folks really want to touch it and feel it. It's just a different world, right?
Right.
But nevertheless, I think if you can get a rapport built with a buyer who's buying 20, 30 houses a month, where once you sell them the first 10, they can get comfortable with the information you're providing, and you can probably work out, a structure to make that work to some degree. So it's going to be interesting. And the people that figure it out are going to be the ones that really capitalize. And they may be the ones, the only ones that actually, stay in business throughout all this, depending on how long this thing stretches out.
Yeah. And a couple side points, and everything you said is yes, absolutely. Again, we're trying to, what I try to do, and I try to coach my team is I want you always anticipating what either the seller needs or what the buyer needs. Always be thinking 2, 3, 4 steps out so that we can anticipate and make sure that that information is readily available.
Mm-hmm.
Is, you know, when we're talking to them, we're reaching out to kind of our VIP buyers, if you will, or we're talking to agents, which, by the way, agents are a phenomenal source to reach out to. And it's simple as just going into Zillow and just start clicking on Zillow, finding agents and talking to them. Everyone talks about, oh, I got to find this list and da-da-da. Like, don't overcomplicate it. Just get out and start talking to people. Effort in, results out. Okay, so I tell my team, like, I can't get this list figured out. I'm just like, just pick up the phone, just start calling, just make it happen. You know what I mean? But really kind of anticipating and having that open conversation with you know, the buyers and the agents that are repping investors that are actually still buying right now, and saying, what exactly do your clients need in order to move forward? What do you need in order to move forward? And we want to be able to provide all that for you up front, so that when you know you're working with Rising Phoenix, you know that you got a clean deal coming. You know that the closing is going to go smoothly, and you know that you can get going with that property as soon as you buy it from us when we wholesale flip a deal.
Nice. So are you taking the assets down so that you have the ability to clean them out, or are you just cleaning them out as part of the service? So they close on Monday at 2, you've got your crew there, even though when they own it, so that they know when they come in on Tuesday, they're good to go.
So this could be, you know, we double close everything, every single thing, double close, no assignments whatsoever. And I've got 3 reasons why I do it. Number 1, I show up in title every single time. In fact, I show up in title twice. I show up in title as a buyer, and I show up in title as a seller. Okay. So I'm in title. I'm in deed records at the county. Okay. Rising Phoenix Real Estate. So I like that. Number 2, I use those county filings to not only have my acquisition team educate sellers that we've done. Hey, if you want to check us out, go check in the deed records. You'll see hundreds of transactions that Rising Phoenix has done. So I just want you to know that we got you, okay? I also use that to raise capital when I'm talking to investors and I'm talking to people that are interested about knowing more about who we are. I say, go look in the deed records, because assignments don't show up. It's, I did 200 deals and I have 200 assignments, like, great, but your potential investor, they can't actually see it. I can show them a deed that shows them. And so I just like controlling the football. The other reason why we do it, the third reason is, you know, I'm in this for the long game. So if I assign a property that's under 5,000 and I double close everything over 5,000 profit, then everybody starts to know my poker game. Okay. But if I just double close everything, you know, and I've even double closed at a loss, okay, to get a deal done, because again, I'm thinking long-term here. And so, and when buyers come to us, investors come to us, that's a business rule with us. And if they don't want to do it, then that's cool. I understand that. So we've actually worked a deal out with our title company to say, listen, I don't need the title policy on my A to B transaction, but my B to C does. So she just passes it through. So I'm not paying any additional closing costs. So that's something, especially right now, if you're doing a lot of deals and a lot of transactions, you can negotiate with your title company.
Yeah, absolutely. And that's interesting, because we double close a vast majority of what we do. And if we do an assignment, we'll do the assignment, like we'll draft the deal up as if it's a double close, and then we'll assign it the day of closing. So the title company will know that we're going to assign, so that they're not doing 2 sets of everything. But we don't want to assign until the day of, because I don't want to lose control of that contract. Because once you sign that contract over, in many instances, you lose control of it. So, but yeah, I'm with you on that. But when you double close, are you doing typically same day double close?
Typically same day double close. Okay.
So then when are you getting it cleaned out? Are you getting it cleaned out before you take ownership, or?
No, I mean, we're doing that as a value add that we tell our investors that, you know, after we close, listen, we're going to go on, we're going to pay for this. And we want you to know, you know, so we're going to go on and get a dumpster dropped out there. We're going to go on and get our crew to go out there and clean that stuff out. If that's okay. They may say we don't need that, and that's okay. But that's just something that it's a value add.
But so we've been making a big push to market towards buyers, and the value of a buyer is so much more important right now than it's ever been. So doing these little steps, you know, will add a ton of benefit to you over this time, especially as you're going out and getting more, you know, newer buyers that you hadn't had before. Maybe folks that are newer to the industry are trying to take advantage of what's going on, and trying to get assets. You know, the more experienced folks, they might already have these folks, you know, these crews together and ready to jump. But it is always nice to be able to go in and look at a totally cleaned out property and know what you have, as you're trying to finalize your scope.
Right.
If it's done for him, that's fantastic. Well, hey
Right.
man, let's make a transition. Let's start talking about capital raising and the oil and gas side of the business, because I'm really, really excited to hear kind of what you've got going on there, like how you got it, like how that's transitioned over the last handful of years, specifically since you've been doing it on your own, and then kind of how the capital raising side of that has gone, and really kind of like what's going on in that industry, because that's probably a more fluid industry with more sophisticated folks. So it might be a pretty good kind of early warning or early indicator of what's going on the residential wholesale side.
Yeah, I mean, the oil and gas world is it's a different animal. It's kind of the Wild West compared to the real estate side. There's no Zillow, there's no MLS, there's no Realtor.com, there's no Redfin. There's no title policies made available for minerals and royalties and all that kind of stuff. So you kind of really have to know what you're doing over on that side of the business. We use a very professional team of consultants that work with us there that are running, engineering reports and stuff like that to get us a value on these properties that we're buying on the oil and gas side. But, the raising the capital piece, when I raised my first fund with Rising Phoenix Resources, that was in around the same time that we did that direct mail piece that I told you about that went out. And I was just trying to just do whatever I could literally to provide for my family and raise capital. And we were getting some traction. So that first fund was all friends and family. And what I did, and this is something to kind of think about, people are like, well, how do I get going to raising money and all this kind of stuff, is I would be thinking about like your friends, circle of influence, and family, okay? And bring them into the deal, okay? Bring them in with a kind of an equity position into the deal if you want to help raise the capital. And so what I did, and this is just what worked for me, is I reached out. I was raising all new capital, okay? There was kind of a loosely like a non-compete on previous investors that we had between, the family business and my company, which was totally fine because I just want to go raise all new capital and start kind of over. And so what I did is I reached out to 3 buddies of mine that I knew kind of were doing things in their respective businesses. And I said, hey guys, you want to put a mineral fund together? I know how to go out and buy minerals that can generate royalty revenue and generate yield to investors. And that's the big key right now. What is generating yield? Because it's a yield-starved world right now. Okay, the stock market is down, okay? Meaning people are losing money. So anything that's positive that's generating yield, which is a return on your capital, is the holy grail, okay? So I reached out to 3 buddies of mine, and I just said, listen, why don't you guys reach out to your friends? You know me, and why don't we put a deal together, and I'll bring you guys in on the general partner side. And we'll split up kind of how we get paid as the general partner, and you guys go talk to your circle of influence that I don't really know, and I'll be kind of the guy that's kind of going to be the deal guy, but you guys are kind of the face with your people,
right? So
that I was able to kind of get outside of maybe my circle of influence, so to speak, to other people's circle of influence. And so we just formed a partnership. We just formed a limited partnership, and the 4 of us were all GPs. I got a majority share of what that general partner payout was, but they were incentivized. They actually did very well. We all put in a little bit of money. I put in barely any money because I didn't have very much money, and they put in most of it. And then we just went after and started buying minerals. And that fund was about $2.3 million. We raised capital. We did like $50,000 to $100,000 units. Okay, it was a limited partnership. I don't want to go into too much of the deal, but it was like a 506c offering. Okay. Because we were selling a security. Okay, but we were talking to accredited investors only, and they had to verify that they were accredited, and that wasn't that complicated to do. Now that I know how to do it, you can actually just 1-page letter from their CPA or their broker dealer or their licensed attorney that basically says, I'm vouching for John Smith. He is accredited. That's all you need. Okay. So people think about turning in their income statements and their tax returns. I don't want to see any of that because I knew that was going to be a hurdle, right? Because people don't want to send all that stuff over. So I found by doing my research and talking to my attorney that I just needed this third-party verification letter. So that's it's just part of the subscription booklet, and it doesn't even slow anything down. So that's a big thing there. But But that's how we did the first deal. And so what I was mainly focused in on the first deal, and this could be down to like a single family home. This doesn't have to be some $2.3 million oil and gas mineral fund. This could be just what are the specifics of a deal that you want to buy and you want to fix up and maybe sell, or you want to, do whatever you want to do with it, rent it out, build a rental portfolio, but you need equity coming in, cash coming in to buy that asset. You can do that on a single family home as well. Set up a separate limited partnership and do that separately. But what we were really trying to do here, or what I was really trying to do, was build a track record, okay? Build a track record, because people believe and they buy into a story. They love the freaking story. Mm-hmm. So you got to be passionate about what you're doing and really explain it. They're going to look at the numbers. Don't get me wrong. They're going to look at the numbers, all that kind of stuff, and that's cool. Okay, what they really are buying into is what's your freaking story, and do they like and do they trust you, okay? And so there's a lot of wholesalers and guys that are on this call right now that are doing deals and they're good at sales. It's the same thing with your audience from a seller. Okay. You got to build the rapport. You got to be believable. All right. They got to like you and they got to like the story. Okay. So that's what we did with Fund One. We went full cycle with that 18 months later, meaning we bought it. We did distributions. The royalty checks came in. We paid our investors and then we sold it. And I've got an example here. Here's what this fund did on a return basis. Yeah. Okay. And then I used that to launch into Fund Two. Fund Two got to 2.8 million because a lot of my guys from Fund One rolled into Fund Two. Okay. And then the guys that came in new, guess what? We had a track record from Fund One. Plus they loved the freaking story. And the story is phenomenal right now for real estate. It's getting even better. I think in 3 months, it's going to be even better. If you want to get in and invest in real estate right now, if you're looking for investors. But oil and gas, just so you know what's happened in the oil and gas market, oil went from literally $60 a barrel, okay, which is how oil and gas is traded, down to today it's $25 a barrel. Okay, Robert, that would be like a home today going from $100,000 to $50,000 in 30 freaking days. Okay, that's unheard of. Okay, so right now we're sitting on Fund 3. Fund 3 got to 10 million, a little over 10 million. Okay. Mm-hmm. All people coming in and they believe this. They were like, yeah, buy low, sell high. It's a simple story, right? Yeah. And so what I'm telling people is, listen, man, oil's at $25 a barrel. Okay. It's hit down to 20. I think we're at a low. Now, are we at the lowest low? I don't know, but it's never going to be free. We raised 10 million on Fund 3 just because the story was so freaking believable. Anybody could figure it out. It wasn't complicated.
That's fantastic.